Imagine waking up on a Tuesday morning. The alarm goes off, but instead of that familiar jolt of anxiety in your chest, you feel a strange sense of calm. You don't have to rush, you aren't frantically calculating how many sick days you have left, and you aren't worried about whether your boss is going to be in a bad mood today. You still have a job and you still go to work, but something deep inside your brain has fundamentally shifted. The invisible weight that you've been carrying on your shoulders since the day you entered the workforce, the pressure of needing a paycheck just to survive, has vanished. Why? Because while you were sleeping, a silent, invisible worker was pulling the night shift for you. This worker doesn't take vacations, doesn't get sick, doesn't complain about the commute, and doesn't ask for a raise. In fact, this worker's only purpose in life is to go out into the world, make money, and deposit it directly into your bank account. This isn't a fantasy. It is exactly what happens when you cross a very specific, almost magical threshold in your financial journey, generating $10,000 a year in passive dividend income. Now, when most people think about getting rich, they picture millions of dollars in the bank, luxury cars, and private jets. We're taught to believe that financial freedom is a black and white concept. You are either broke and grinding, or you are a multi-millionaire sipping out of a coconut on a beach in Fiji. But the human psychology doesn't actually work like that. The truth is, the most profound psychological shift in your life doesn't happen when you hit $10 million. It happens much, much earlier. It happens the moment your assets can pay for your basic survival. But getting to that point requires overcoming the greatest mental hurdle in the world of personal finance. To understand why reaching $10,000 in dividends changes everything, we first have to look at the trap that keeps almost everyone broke. It is a trap built on human nature, biology, and the way our society is structured. From the time we are young, our brains are wired to understand linear rewards. You do an hour of work, you get an hour of pay. You study for a week, you pass the test. You put $1 in the vending machine, you get a candy bar. This is linear thinking, and our brains love it because it's predictable. Cause and effect are right next to each other. So when we enter the adult world, we apply this exact same linear thinking to money. We trade our time for a paycheck. When we want more money, we try to work more hours, or we try to get a promotion to increase our hourly rate. But there is a massive flaw in this system. Your time is finite. You only have 24 hours in a day, and eventually you need to sleep. You become a bottleneck to your own wealth. When people realize they're stuck in this linear trap, they usually try to escape by investing. They read a book or watch a video, and they decide to put their hard-earned money into the stock market. They take $1,000, money they sacrificed for, money they could have spent on a vacation or a new phone, and they buy shares of a solid dividend-paying company. A dividend, simply put, is a slice of a company's profit. When a business makes money, it can either reinvest that cash into growing the business, or it can hand a portion of that cash directly back to the owners. When you buy a stock, you become a part owner of that business. You are legally entitled to your share of the profits.
So you invest your $1,000. You wait 3 months for the quarterly dividend payout. You check your brokerage account, excited to see the fruits of your labor, and there it is, a deposit for $3.50. This is the exact moment where 90% of people quit. This is the psychological breaking point. Your brain looks at that $3.50 and feels deeply, profoundly insulted. The linear cause and effect part of your mind screams, I gave up $1,000 for this? I could have bought a new television. I could have gone out to a nice dinner. Instead, I locked up my money to earn what amounts to the price of a half-empty cup of coffee? Our brains are not built to understand exponential compounding. We are built to seek instant gratification. When the reward seems hopelessly small compared to the sacrifice, our natural instinct is to abandon the strategy. We sell the stock, buy the TV, and go right back to trading our time for a linear paycheck. We accept the trap because the escape route looks too slow. But for the few people who manage to silence that frustrated voice in their head, something incredible starts to happen. They don't spend the $3.50. Instead, they use that small dividend to buy a tiny fraction of another share of stock. Think of investing like planting an apple orchard. Your initial money is the seed. When you plant it, it takes a long time to grow into a tree. For the first few years, it looks like nothing is happening. You water it, you protect it, but it's just a stick in the mud. Finally, one year, the tree produces a single apple. If you have a short-term mindset, you eat the apple and that's the end of the story. You have one tree and you will only ever get what that one tree produces. But if you take the seeds from that first apple and plant them right next to the original tree, you are starting the cycle of compounding. The next year, the first tree produces 2 apples. The second tree grows. You plant those seeds. A few years later, you have 5 trees producing apples. You plant all of those seeds. Eventually, you have an entire orchard. And the most magical part? You didn't have to buy the seeds for the new trees. The orchard is now expanding itself. In finance, this is called a DRIP, a Dividend Reinvestment Plan. Every time you get paid a dividend, you automatically use it to buy more of the stock that just paid you. As you keep contributing your own money from your job and your dividends keep buying more shares, you enter the early phases of the snowball effect.
First, there is the free coffee phase. You are making maybe $100 a year in dividends. It still feels small, but psychologically, it's a nice little win. You realize that your investments are now buying you a coffee every couple of weeks, and you didn't have to work a single second for it. Next comes the utility bill phase. This happens when your portfolio crosses into generating $1,000 a year. You're making about $83 a month. Suddenly, the math gets real. You realize that your water bill, your internet bill, or your phone bill is now being paid by the productive assets you own. A specific, tangible stressor in your life has been permanently deleted. If you lost your job tomorrow, your phone would still stay connected because your portfolio is paying for it. This is where the psychological shift begins to accelerate. You start to see your money not as something to be spent, but as a worker that can be hired. Every time you are tempted to buy something you don't need, you calculate how much dividend income that money could produce instead. You stop buying things that lose value, and you start buying your own freedom. But the true metamorphosis, the moment your entire perspective on life changes, happens when that snowball rolls all the way down the hill and crosses the $10,000 threshold. Let's break down what $10,000 in annual dividend income actually means. If you divide it by 12, it comes out to $833 a month. Every single month, rain or shine, in a good mood or a bad mood, awake or asleep, $833 drops into your life.
From a purely mathematical standpoint, how do you get there? If you are investing in a conservative, well-diversified portfolio of dividend-paying companies or index funds with an average yield of about 3%, you would need roughly $333,000 invested. Now, when you hear that number, your first instinct might be to panic. $333,000 sounds like an impossible mountain to climb. But remember the orchard. You don't have to save $333,000 from your paycheck. You just have to start planting the trees. Time, compounding, and the reinvested dividends will do the vast majority of the heavy lifting for you. A massive chunk of that $333,000 won't be money you earned at your job. It will be money your money made for you. When you finally hit that $10,000 milestone, an invisible switch flips in your brain. You experience a profound psychological transition from a scarcity mindset to an abundance mindset. For your entire life, your brain has operated on a baseline of financial anxiety. Even if you make a good salary, there's always a quiet hum of fear in the background. What if the company downsizes? What if my industry changes? What if I get sick and can't work? This fear dictates how you behave. It makes you tolerate a toxic boss. It makes you say yes to working on the weekends when you'd rather be with your family. It traps you in a state of quiet desperation because your absolute survival is directly tied to the whims of your employer. But $833 a month changes the equation. Think about what $833 covers in the real world. It covers all your groceries for the month. It covers your car payment and your car insurance. It covers your electricity, your water, your internet, your streaming subscriptions, and your gas. At $10,000 a year, your basic, fundamental human needs are entirely funded by your assets. You aren't going to be buying a yacht, and you still need a job to pay for your rent or mortgage, but the bottom has been put in. The absolute worst-case scenario, total ruin, starvation, the inability to keep the lights on, has been mathematically removed from your life. This creates a phenomenon psychologists call baseline security. When human beings achieve baseline security, their behavior radically transforms. You suddenly realize that you are no longer a hostage to your job, you are a volunteer. Yes, you are still working to pay for your housing and your vacations, but you don't need the job just to eat. This subtle shift in power dynamics changes how you carry yourself. You become less stressed. You speak up more in meetings because the fear of getting fired loses its sting. If your boss demands that you cancel your vacation to finish a project, you have the financial armor to politely say, no. What are they going to do? Fire you? Your groceries are already paid for by your investments.
This is the concept of FU money, but it's a lighter version of it. You don't need millions of dollars to tell the world you won't be pushed around. You just need enough passive income to know that you will not starve. Furthermore, reaching $10,000 in dividends cures you of lifestyle creep. Lifestyle creep is the trap where your spending rises to match your income. You get a $5,000 raise, so you lease a nicer car. You get a bonus, so you move to a more expensive apartment. You end up making twice as much money as you did 5 years ago, but you still feel exactly as broke because your expenses have ballooned. But by the time you have built a portfolio that generates $10,000 in dividends, you have spent years rewiring your brain. You have watched the compounding process work. You have trained yourself to delay gratification. The dopamine hit you get from seeing your dividend income increase is now far stronger than the dopamine hit of buying a designer jacket. You no longer care about looking rich to impress strangers. You care about actually being wealthy. You understand the hidden cost of things. If you want to buy a $40,000 luxury car, your brain doesn't just see a $40,000 price tag. Your brain sees the $1,200 in annual passive income that $40,000 could produce if you invested it. You realize that the true cost of the car isn't just the sticker price, it's the freedom you are sacrificing to drive it.
This realization makes you incredibly protective of your capital. You have tasted the freedom that passive income brings, and you want more of it. This leads to the acceleration phase. Getting from $0 to $10,000 in dividends is brutally hard. It takes years of discipline, patience, and ignoring the temptation to spend. It is a slow, grinding, uphill battle. But going from $10,000 to $20,000 happens incredibly fast. Why? Because you now have a massive tailwind. You have $10,000 of fresh capital pouring into your portfolio every single year, regardless of what you do. Even if you never contributed another penny from your day job, your portfolio would continue to buy more shares, generate more dividends, and aggressively compound on its own. But you will keep contributing, because once you see the math working, it becomes an addiction, a healthy, life-changing addiction. You realize that every dollar you invest is a soldier you are sending onto the battlefield to capture more territory for your financial independence. So, how do you actually build this? What is the practical takeaway to ensure you don't fall into the traps that ruin amateur investors? The biggest mistake people make when they try to build passive income is chasing high dividend yields. Human nature kicks in again, and we look for a shortcut. You might see a company offering a 12% or 15% dividend yield. Your brain does the math and says, wow, if I buy this,
I can hit my $10,000 goal with only $80,000 invested. I'll get there so much faster.
This is the ultimate financial trap. In the stock market, an abnormally high dividend yield is almost always a giant blinking red warning sign. It usually means the company is failing, its stock price is crashing, and the dividend is about to be cut or eliminated entirely. It's like buying a house for pennies because the foundation is entirely eaten by termites. Wealth is not built on shortcuts. Wealth is built on boring, predictable consistency. Instead of chasing high yields, the secret is to focus on dividend growth. You want to buy shares of high-quality companies or broad market index funds that have a long history of not just paying out dividends, but increasing them every single year. Imagine you buy a stock today that pays a 3% yield, but that company is highly profitable and growing, so next year they increase their dividend payout by 8%. The year after that, they increase it by another 8%. If you hold that stock for a decade, the yield on your original investment might grow to 6, 8, or even 10%. Your income is growing completely independent of the market's daily price swings. The market could crash by 20% tomorrow, but if the companies you own are fundamentally strong, they will keep depositing cash into your account. This is the ultimate defense against inflation. When the cost of groceries goes up, the companies that sell those groceries make more money, and they pass those profits on to you in the form of higher dividends. Your passive income naturally scales up to protect your purchasing power.
You build this machine by automating it. You don't try to time the market. You don't wait for the perfect moment to invest, because the perfect moment is an illusion that keeps people paralyzed. You set up a system where a portion of every paycheck is automatically transferred to your brokerage account and invested in a diversified fund. You turn on the DRIP feature so your dividends reinvest themselves, and then you get out of your own way. You let time and math do what they do best. Reaching $10,000 in dividends is not about becoming a Wall Street genius. It is not about reading complicated financial charts or predicting the future. It is entirely about mastering your own psychology. It is about accepting the fact that the first few years will feel slow and unrewarding. It is about fighting the urge to buy things to impress people you don't even like. It is about understanding that true wealth is not measured by the car in your driveway, but by the amount of time you truly own. Time is going to pass anyway. 5 years from now, 10 years from now, you will wake up on a Tuesday morning. The only question is what your reality will look like when you do. Will you still be trapped in the linear cycle, panicking about the bills, trading every waking hour of your life just to keep your head above water? Will you still be the only one working to support your lifestyle? Or will you wake up with that strange, beautiful sense of calm? Will you look at your phone, see a notification that your silent worker just made another deposit, and know that no matter what happens today, your baseline is secure? $10,000 in dividends is not the end of the journey. It is the beginning of your freedom. It is the moment you stop working for money and your money finally starts working for you. The seeds are right in front of you. All you have to do is start planting.